Okay guys, today I'm going to talk about a way to determine short-term bias that I use fairly regularly, and I think it could be very helpful for you guys as well. It's actually very simple, and what I like about it is that not only is it a way to kind of determine your bias, but to help you determine your bias, it's a key tool for that, but it also, in a way, can be a standalone trade system where you can not only determine a bias, but you can look for entries and just trade it as a whole complete system that you can backtest and find ways for it to work for you. So, and it's totally scalable. And by that, I mean, you can use it on any time frame, any series of time frames, as you'll see. And for that, I think it'll be a good way to simplify your trading in a lot of ways. So let's get into it. The basis of what we're doing, it's really a 3-step process. But what we're going to be looking for is a candle raid. Step 1, candle raid inside an imbalance. Call it fair value gap. So this is step 1. So it should look something like this. You have a series of candles, and we know that we have gaps here. You can see we've got candles. We have some imbalance here and even lower here. And the premise of this is that one candle will wick below the low of a neighboring candle. So it doesn't really matter the time frame. Let's say we're on a daily chart here, and you will see that we get like a wick below here inside a gap. So that's step 1. Then step 2, so this will be on our highest time frame. Okay. And so first of all, from that alone, you might use that alone as enough to have a bias that you want to be buying. And that could be all you need. But I'm going to show you a couple other steps to give it a little bit more reliability, let's say, and a little bit more of a structure to structure trades off of. And so step 2, we were going to use a medium time frame, and we want to see a close above or below the raid candle seen on a medium time frame. Okay. So what that would look like is if we were to isolate this area here, going below this level, you'll have our candle low here. And then we'll see on the medium time frame. So maybe this is a 4-hour chart, let's say, relative to the daily up there. And then we might see on the 4-hour, this could be a 2-hour even, you'll see a candle that kind of raids this, let's make it blue, that raids this candle low inside this imbalance. And then, maybe it stays down here a little bit. But eventually what we want to see is on this medium time frame is a move back up with ideally a close above the raid candle's high. So this is the first candle that probed below this low. And then after a brief period of trading down below this level, we get a candle close above. And it can close like that, or you can see something like this where, this one closes above. So it can be seen in a number of different ways. Now, once you have this, and you might be able to have this as an optional step. You'll see there's some examples where if you have more confluence, maybe you don't need to wait for this closure on this medium time frame, because what you're going to find on the lower time frame, which is step 3 on this list, which can just be step 2, is a market structure shift or break, whatever you want to call it, on a lower time frame. So this will be our 3rd time frame. So relative to the daily chart here, this could be our 2-hour chart or 4-hour chart. Then on a lower time frame, maybe an hourly or a 30-minute chart, you will see this that looks a little bit more defined as something like this, where basically a short-term high will be taken out with hopefully some sort of imbalance here, and then price can trade back into it, and then you can essentially refine your entry like this. However, you don't need this time frame. One of these, either you use step 2 and step 3, or one of these could be an optional step. So you could get a close on this time frame and just enter here or buy at the level with your stop below, more or less, if you don't want to be too refined. Or if you want that cleaner entry, that extra confirmation, you could enter on this lowest time frame. And if you don't get you might not even get, you might have this first before you get the close here. And that's why I say this step might be optional if you have more confluences here. But ideally, it's nice to have all of these three playing out together in more or less this order. Now, the pros and cons are that sometimes when you get this close, you might not get this retest on the lower time frame. Sometimes you will, sometimes you won't. And so, it's never going to be perfect all the time. But even if you don't have all of this, just to see this, let's say this was playing out on a higher time frame, on like a daily chart or a weekly chart even, just seeing this closure above after this raid can be enough to formulate a bias for the next week or the next day or so. And that's why I say this is a short-term bias. And even if it's just on a 4-hour chart, for the next session, you might have a clear bias of which direction you want to trade in, which could be enough to get you a winner or to avoid a loser if you happen to maybe see a short setup that goes against this. So that's the basics of it laid out in a diagram. Let's go through some examples. And also, I just want to add that the thing is that sometimes you can see it like this, where you get a wick here, and then you get another candle, and then this one wicks here, but we actually are still in the gap. If you see this higher time frame gap right here, and this is why I like the middle time frame candle close, because it'll help you avoid some losses, because you might see this candle that goes below this low, let's say, and just indiscriminately buy, and then the next candle comes and takes you out. And so that's why I like looking at the middle time frame sometimes if I'm unsure, to see this candle close above the raid candle. And a lot of times you'll see it like on this, and the setup will appear again on this, let's say on this candle, whereas this one maybe didn't close above the middle time frame raid candle. This one does, and then you can get in the trade. So you'll see what I mean with some examples. Let's get right into it. And first of all, let's just take a look at the NASDAQ. So I've got these already set up here, and just to take a look before we even go on a different time frame. We're just on the 4-hourly, and I just think as a good practice, as a good exercise is, go through a month of whatever pair you trade and just mark out the lows and highs and lows of candles that get kind of swept inside imbalances. And I think that's the key. We want to cut out the noise. We don't want to trade every raid of a low or every raid of a high. We don't want to look at every imbalance. Some, like I said, are much bigger than others and smaller than others. So we want to narrow our focus a little bit, and that's what this is going to do. But you also want to see how many opportunities you might get in a week or in a month. And so before we go in the lower time frame, just take a look at how we go below this low into this gap, and we get a reaction. We consolidate, we go below this low, these lows here, get a big reaction. We come up, we come and take out these lows, we get a little reaction. We take out these lows into this gap, get a bigger reaction. We come up here, we start making a push higher here, leaving a gap here, and we just mark out the lows of these candles. And we're not even changing time frames yet. And we can see that just as a starting point, we can see that when we get these movements below these lows into imbalances, we tend to get some sort of reaction. Now, we don't know at the time when price is first trading into. At this point in time, this is a solid candle. We don't know if it's going to wick back up like that. And so that's why we are going to incorporate things on the lower time frame to help us. But I do think it's interesting to first just kind of do this, generally speaking, on one time frame, so you can see what we got. And even here, this is good. It's not going to be perfect all the time. Here we got a solid gap down. You could argue that we've had a bit of an impulse move here, but now we're correcting, and we have a movement above this high a little bit. It trades lower, but what does it do? It takes out this low into this imbalance, and we get a movement higher. Then price moves up higher, closes this gap here, and then we get a raid of this candle's high after just closing this gap, big rejection back down, moves into this imbalance right here, taking out this candle's low, then we get a movement higher, and then again back down, closing in this gap right here. After we close in this gap right here, more or less, we've got these two candle lows, you could call them equal lows. Price wicks down, and then, yes, takes out this low, but so the way I look at this too is once we get this close here, this is still, in my view, respecting this imbalance. This is still a raid of a candle low into an imbalance. And just seeing this alone, you can see on a 4-hour chart that we can formulate some degree of a bias just from this alone. And so you can use this as a bias and incorporate other elements that you like to trade, other techniques. But let's go into the lower time frame on some of these and look at the types of setups that we could get. So for one, let's just look here. And again, these are all hindsight. I'm going to show you, I think as well, maybe we'll do some backtesting with this later if there's time, or I'll make it as a part 2. But you'll see how, I want to look at too how the losers form. Because there will be losers, but very often it's because if you take a loss on this, it's because you have tunnel vision and you're seeing a raid and into an imbalance on one end, but you're missing it on the opposite end, and you might get some conflict. I'll show you this on, I think there's a good example on the euro. And so I'm going to go through it on NASDAQ and S&P. I have some examples on Forex and even crypto. So no matter what you trade, I think there'll be something for everyone here in this video. So just starting right here on March 15th, we get this raid below this low. And we have this movement up, and we can, we could go on and on about other confluences and other things, but just starting on this alone, let's take a look now at bar replay here. We can actually see, again, we don't know yet that this is going to close above. So let's go to first the 30-minute chart. So I might use the 30-minute chart. If 4-hour is my highest time frame, I might use the 30-minute chart as my medium time frame. And I can see right now we've gone below this low. And so I would mark out this high. Now this is not at the trading time that I would trade just yet. This is at 6:30. So it's before, but we can see that price consolidates a bit. And then I want to say this is 8:30. Okay. And then close to New York Stock Exchange open, we now get this first candle movement above this high. So candle wicks down. So here we have our first close on the 30-minute time frame above this, what we'll call our raid candle. It's gone below this 4-hour candle low into a 4-hour imbalance. And now we finally closed above it. And so if you weren't super confident on buying here right off the bat with, just based on this shift in structure above this high, leaving this gap, then now you have that candle closure. And then we can now look for entries on our entry time frame, which in this case could be the 15-minute. Maybe you want to use the 5-minute as your entry time frame. There's no right or wrong, but here you can see that we've got a order block right here, this big move. We've come down into it, and now we've created another order block off of it. So, maybe you want to do an OTE. Let's have our fib on here and retracement levels. There we go. And then you want to target, enter at the 62, stop below here. So you don't have to have your stop all the way down here. And then you can aim for these highs right there. And then market taps you in. This is around lunchtime. And then the market pushes back up. And again, this could be how you enter. This could be, the way you enter, or you just have this as a bias, and maybe you're someone that likes to enter and play these, moves on the lower time frame at, let's say now the market's opened after lunch, 1 o'clock. We get our structure shift up here, fair value gap through this order block. You buy, or this breaker. you buy here, and then, you know, you target this high and whatever our higher time frame target is on the left. So that's just one example of it playing out. I'm not going to have like 30 examples in this video, but I do think you can have fun looking through it yourself. But now typically there's more to this. I don't want to oversimplify it and have you think that every time you see a gap, every time you see a candle low that gets rated, that it's going to be a buy. Now, what I do prefer are these types of ones where you get a solid move up and then price doesn't spend too much time up here. I love this because we wick down, gap. We have also these down close candles. And this is one where I don't think you get the close on the middle time frame. If you're, let's say 30-minute is your middle time frame, this is the candle that breaks the low. And we don't get a closure until here. And so by this point, you know, unless you see something on a lower time frame, there's not really a buy, at least back down in this area. But again, your bias could be well established by this, and maybe you do see something or a scalp and you want to go in this direction at least. Let's say you're trading the opening range strategy and then you see this move and you don't know which direction you want to go in, but you see this move below the 4-hour candle low inside the 4-hour fair value gap, and then you get this structure shift. And again, you can see that we get this order block here, push up, trade back into it, another down candle, push up again. This becomes a propulsion block, which is just an order block formed on another order block. Price comes down, trades into it, big rally the rest of the session. Let's go to a trade that I did take end of day on Friday of last week. You can see here we have this gap right here from this push up. We have a few lows right here, this one, and then also this one. And I actually prefer, if price has spent a lot of time away from a gap, let's say, and now it's trading back into it, I prefer to see a local candle low get rated. What do I mean by that? I mean just a recent one. So let's just say that this candle rated this low. I would be a little bit more cautious. I like to see if price is showing, maybe not so much in this because it's really just kind of range bound, but sometimes you'll see like gaps here, but price has already kind of gone too far away, and then it comes down sharply. And even though this first move down does raid, let's say, a candle that's over here, because of this momentum, I prefer to see it kind of base a little bit and see a candle right here get rated, let's say, and then look for my entry instead of this first one that comes into this level. So that's just one little nuance, but without getting too in the weeds, here you can see that we get this raid below, and then on the 30-minute time frame, you can see that this candle right here is the one that probed below this low. We get the close above, and again, you could buy right then, but you're not getting the best entry. Not that you need the best entry, but sometimes it's nice to just at least get that 50% retracement after the confirmation signal. So this will be our kind of confirmation signal that the momentum is shifting to the upside. You can see, I actually took this off the 10-minute, but you can see that we have a little bit of a displacement. We have our low of the day forming around right before lunch, and we get this push up, this imbalance, balanced price range, optimal trade entry to new highs for the rest of the day. Now I'm going to try to shorten this video a bit, quicken the pace. Let's look at some other pairs. I was going to go into S&P. I'll show you one on S&P. So this is something why I say short-term bias. You know, you can trade this in both directions. You can see that you get, if it's a clean enough entry and you have enough range to work with to your first trouble area, even though we were kind of bullish here, and I've shown you some bullish examples, you can also see bearish examples, and you can also make profitable trades from them. So here we have a gap like here. We have a candle raid on this daily time frame, closing this gap. And if we look at our 4-hour, let's say, or maybe our 2-hour as our medium time, it doesn't really matter. You can see we have a big raid candle right here. Now we're not going to necessarily wait for a close below this in this example, just because of how much momentum it was. That to me might be enough to feel confident in shorting on a retracement. You can look at it like this on the 1 hour maybe, where the raid happened here. So you have a raid of that daily high, that daily candle, previous day's high inside a daily gap, and then a push, shift in momentum down, breaking the low of that raid candle. And then essentially you just get, it's an optimal trade entry more or less back to here. But maybe you don't want to take a trade like this with your stop above the high. You know, if you're a short-term trader, intraday trader, this is how it's helpful for bias. And now we can, let's just mark it off with the box, this kind of this general zone here. This is a way where we can use what I've showed you on the higher time frame to form a bias to take short entries. So displacement with a gap, price comes up, raids it, comes back down. Now you can just find plenty of shorts on this move down. So just wanted to show you that you don't have to trade it on the 1 hourly if you don't want to, but you can use it to form a bias to take lower time frame setups depending on what your model is. Let's show some Forex examples. Now this is going to also be playing out very similarly. It was around the same time, but I want to show you how we have, you know, again, just on the daily chart, let's just take a look back. You have these lows here. So now this is exactly what I was talking about. So I would love for you guys to just check this out on your own time, but you can see we have this gap right here. We have a raid, these wicks. So we'll see how we're still respecting it with the bodies. And so as long as we're still respecting it with the bodies, this is an area that I would look at for reactivity. Price trades below this, we get this move up, okay? You can see here, we get, again, just looking at the lows, there's a little gap right here. So again, this one, very curious to study this because look right here. This is what I'm talking about. Yes, we rate a low here. We do get some sort of reaction. I don't know how this played out on the lower time frame. Let's start right here. So we never get a close above this raid candle. So even if we get, let's say, so there's no real setup even on the lower time frame on the 30-minute, let's say, but if you're using that middle time frame as a confirmation as well, you never really get that confirmation, that close above. So you just keep looking. You say, okay, on the daily chart, we have another day that's coming up right here. So now we can see we get a movement below this day, and we can see now what do we get here. So now on this candle, we would mark this candle out as our raid candle. We want to see, do we get a close above it? And we do. Is there a trade? I don't know. You know, sometimes price is just going to take off and you're not going to get that pullback. But even though you don't, and you actually do. So, you know, you can take, again, if you don't want to trade off of the hourly chart, you can just frame it as a bias of what, you know, okay, we've come into it, we've reacted, and now we're back at this imbalance area, and we can see the same thing play out. Now we can play this model out on the 1 hour as your highest time frame. We can say, okay, now we're at London session. So you can see that here we have this imbalance on the 1 hour. We have a candle raid. We're going below it. Now you can play it here too, but this is before London session. So this is like Asia session. So you can see we would get a setup here as well. If you can see that we've got a little candle raid into the gap. And now you can see that we have, let's just take a look here. We could use maybe the 15-minute as our medium time frame. And you can see that you get a push close above the raid candle. So you could have literally bought that by the close there. You know, maybe you target here, you would have gotten stopped out probably here, possibly, depending on your stop placement. But you would have probably taken a partial, you know, even if you just went 2R. But again, this is not the ideal time. So you can line it up with time of day, kill zones. Here we have another setup. So same thing. We were showing you on the 1 hourly. We have a push below 1 hour low inside a 1 hour gap. And then the 15-minute, we get a close above this candle. And then I don't know if you get a retracement on it, but depending on what your system is, you could probably find a setup intraday. Okay, so what I really wanted to show you was how to deal with conflict. So look, we have a gap right here, but we have a lot of momentum coming back down. So even though on this day we probe below it, I would prefer to use this day, see how we're maybe basing. And I want to see if we get on the middle time frame, maybe it's the 4 hour. This is great. Now we get a push below above the raid candle, which would be right here. And then so this could be a buy, but let's look what happens. You get a little bit of a move up. So that could have been the trade right there, although it's not in the key session times. And then we get a move lower. So look how this didn't hold for very long. And you might want to ask yourself, well, why is that? And what I've noticed is because a lot of times you'll get conflicting setups where you get technically a setup here, and you also get a setup here to the bear side. So you have a raid of a candle high into a gap, and then you have a, let's see, a breakdown on the 4 hour. This is our raid candle, or this one, depending on what time frame we're using here. So in this case, it would be here. This is the beginning of the raid. So we get a push up here and then a break below it here. And then we get this imbalance right here. And so you see how we can frame bias like this. And now you might say, well, why am I choosing this one over this one? And maybe you want to sit on the sidelines when you see this kind of conflict on both sides. But maybe when you see this on the daily, this conflict, this is a clue or a cue to go one time frame higher, and you go to the weekly chart. And you can see on the weekly chart that we have closed in and not respected this gap right here on the weekly, this discount gap. We've closed through it. And so if I saw that, that would put me off towards buying, because to me, if I see a bullish gap and we've been kind of trending up and it doesn't even get respected at all, just gets a straight close through it, then, and now you can see that there's a volume imbalance and actually a bearish gap. And then we can favor shorts when we see this on this particular day. But even favoring shorts, the buy still provided a little bit of a move, but it's all about taking profits at logical places and not being caught off guard when you see it move back down. And you see, you don't want to have tunnel vision and only see the bullish gap and the bullish raid, because the market is always perpetuating new price action, new information. And that's why you got to stay fluid when you trade price action, in my opinion. Okay, let's look at US dollar, Japanese yen back from February 10th, 9th and 10th. And you can see we have a bullish displacement. We have a gap here. We've closed above this bearish gap. So to me, this is leaning bullish. But you can see that we have a raid here. And we also have a raid here. So you could look at this and you could say, okay, this is what I'm trying to tell you about, how it's not always, this is not a perfect, like there's no catch-all perfect strategy or system all the time, but it's a way of navigating. And you can see you do on the 4 hour, which could be our medium time frame, get a close above this middle candle that rated this low. And you do get a movement higher for a period of time. So short-term bias. So maybe on this day, you found a lower time frame long on here. But once you hit an objective, which in this case, you could see this is the high of Wednesday, this is a high of day. So this is a previous day's high being hit on Thursday. We have a bearish imbalance right here, and the market reacts and has another push down and takes out the low. So if you bought this expecting, this to sort of be the low and that's going to work every time, it's not, because you have resistance in the way. And so we have to respect that resistance. You have to take a partial here if you bought here. You have to move your stop up. You can't expect that this is going to be forever intact. So this is a short-term bias approach. And so now you see on the next day, we get a push below. And so now we can get rid of this and just take a look. But the overall setup is still valid. It's still a valid place to look for buys. We have a daily low being rated in a daily imbalance. And now we can look. We can see that we have this was our raid candle below the low. As of now, I don't know if it goes lower again. Okay, so now we're pushing up. Now we've gotten a close above the raid candle. So, we've created a new gap here. And so maybe we want this as our entry. You know, I'm just winging it here. I don't even know. Yeah, so there we go. We got a push reaction off the gap. This is at the, again, this isn't the time I would really be executing necessarily, but the idea, we get a movement up. You can see we have a breaker here. We have a breaker. So, you know, maybe this is our, you could use this candle here. This is the bigger body, this up close candle, these two candles. The market, maybe this could have been the entry, optimal trade entry. Again, I know this is all hindsight. I'm just trying to make this a quick thing, but you know, you can see that on this day. So this is New York session. We can see that, you know, if you trade intraday, you could see using this framework as a bias for bullishness, you can see this as a movement low here as a liquidity raid. And then you get a displacement up, and then you get an entry, and then you can ride to new highs here. So that's US dollar, Japanese yen. And I want to show how it works also in crypto. So we have Bitcoin, and very clean example here on the weekly chart. So again, you can use this on all time frames. We get a displacement up. We can mark the lows. Notice that we get a close here below. Let's study that first. This wasn't what I was expecting to do. Let's look at these two candles, because you can actually get the setup here, because this is, again, a weekly. We start from right to left here. A low, a break below, a raid below a weekly candle low inside a weekly gap. And so maybe we use, I don't know, a daily here as our confirmation. So our middle time frame, this is our raid candle. We get a close above it, and so now we have a bullish bias. We've confirmed our bullish bias if you weren't confident enough in this. But look, even on the daily chart, you can see, what do we have? We have a raid of this candle low into this gap, and then we can look on the lower time frame for confirmation of that. And so we see our raid is here on the 4 hour. This candle, raid candle, breaks below, closes above it. And so this could be your entry. And so now you're riding a very high time frame move with a very tight entry. And I mean, it's just beautiful. This repeats. This is just a thing that just happens all the time in the markets. Not going to say you're going to always win and have perfect success rate with it. But again, let's look at this. Let's look at this week. So, you know, you might have been here and say, okay, let's look and see what kind of move we get below this low. Again, on the daily chart would be maybe our medium time frame on this, and we get a push below. Now you could buy if you're really confident, but it's not, I mean, unless you have your stop below this low, which is, you know, fine, but you might not want to operate on trading on a daily chart. But you can see that we don't get that push back up. This isn't just, so there's no buy here. We have not gotten that middle time frame confirmation, you know, nor do I think we see an entry pattern. You know, you might be, you know, you might kind of see this high getting taken out, but the market isn't ready yet based on if you use that middle time frame to go up. And then you can see it spends one more, it has one more move down to take out the low and then pushes up, which is that example that we talked about. Now that's just one instance of it, but you can see this playing out again and again. And now we have this raid of this low, candle low into a gap. Now we have this gap here with this gap. These are overlapping gaps, and we could call this a balanced price range with a breaker that took out this low. And so maybe here you don't need all that extra confirmation, but you do here get this close swing low above this candle, but this isn't the one that took the liquidity. This is the one that you really want to see the close above. But like I said, with those extra levels of confidence, maybe you feel more confident in this as a market structure break. This high here, and now, you know, maybe you just want to see another 4 hour high get taken out right here. You get it here, and now you get that daily close, I think, above here. So there you go. There's the daily close. And then on this day, again, you can't expect to get the perfect retracement back down here at this point. But once you get this close above this raid candle, and now we can look at this day and say, okay, I know on this day, I want try to be a buyer and try to figure out where the low of the day is going to be, somewhere, let's say, somewhere here on the lower time frame. And then you can look, whatever your model is on the lower time frame, you can see that the market just pushes straight up. I don't know if we get a movement lower. There we go. There's our Judas down lower. And when we get our shift back to the upside, there we go, right there. We have a gap through a high. No idea if we actually get this, wherever your stop's going to be. There you go. Perfect. So seeing this as a framework for bias, you don't have to enter off of that. You can look at it on a 15-minute chart and say, okay, I know on this day, based on what I've seen, I want to be a buyer on this day, and I just have to look for a setup. This is New York session. We get our shift back up to the upside, fair value gap through a high. You get your entry, and then a very fast move because you're using the weekly and the daily chart basically to frame your bias. So I hope this was helpful. I don't know if I have time to do a back testing session right now. I'd love to do it because I would show you kind of how you kind of have to read things as it plays. It's not always going to be perfectly clean like this. You're going to see where you have a short-term bias and you get a little bit of a move, but then there's an opposing setup that basically happens on the bearish side, because most of the time the market is kind of corrective. It's range bound. It's not always trending and expanding so aggressively. So I would like to do that in a future video and show that, this is just a starting point. You got to pair it with other things that you like to trade, other confluences. You can use this as a framework for a trade plan. But, I can't tell you based off of this video, okay, here's where your stop should go every time. Here's where you should enter every time. Here's where, you should take profit, should go for 2R, 3R. You got to figure out, what expectation makes sense and what's going to work over a series of trades and what fits with your personality, what fits, with your time zone that you live in and hours that you're able to be in front of the charts. So again, this is just something that I use for bias when I'm trading NASDAQ, and I will use this as bias for trading the opening range. So when I'm looking for opening range setups, I will use this as, okay, where are we in relation to, let's say, an hourly gap or a 4-hour gap? What have we done? Where have we, rated? What candle have we rated? Where are we in that cycle, in that sequence? And from there, I can make better decisions on, okay, if I see a bullish scenario playing out, and I'm bullish because of this sort of bias, then I'm not going to be looking for shorts in the opening range setup necessarily. I'm going to be more likely to look for buy situations, buy setups. So hopefully this was helpful. I'm going to do more videos about bias because I know it's a topic that people want to know more about. If this video was helpful to you, please leave a like, leave a comment. Let me know if you like this content. Let me know if this is helpful. If it is, I will make more of these types of videos. And that's it. Have a great day. Bye.